Hello, this is Carlos Asilis from Glovista Investments, here to share our market outlook for the month of March. First, in the month of February, and also thus far in the month of March, risk asset markets have sold off sharply on the back of Russia's invasion of the Ukraine. And despite a rather constructive global macro calendar in which mobility metrics from around the world continue to strengthen, given incipient signs of victory over the pandemic. Now, Russia's invasion of the Ukraine has resulted in backup of risk premium levels across asset groups, adversely impacting equity prices via the resulting compression in earnings multiples. Secondly, contractionary economic expectations resulting from the war in the Ukraine has adversely impacted credit spreads. Now, these dynamics impact global markets and the global economic outlook through three principal channels. First, we are re-energized inflation backdrop pertaining to the energy space, right? Higher energy inflation. Secondly, a tightening of financial conditions via a spike in contractionary or adverse economic expectations. And third, the third channel takes the form of scenarios in which global trade gets disrupted, also entailing a disruption in global supply chains. Now, from a near-term perspective and taking into consideration the primary uncertainty, unknown, if you will, pertaining to the final outcome to the invasion, both in terms of the timing and the nature of the conclusion to current hostilities, we believe that the invasion results in a very committed U.S. Federal Reserve in preserving a tightening of financial conditions in the raise of federal funds rate over the course of 2022 and 2023, unless, of course, recession scenarios gain a higher probability weighting. From a geopolitical perspective, we think that these dynamics tend to reinforce the major investment themes embraced by the Glovista investment team at the end of 2021, in particular, maintaining overweight allocations to value-oriented sectors, which have done extremely well compared to growth sectors, and also the quality factor. Glovista continues to favor high-quality factors globally, and those factors continue to significantly outperform benchmarks. Finally, these geopolitical developments have led our team to raise our cash levels in our portfolios earlier in the month of February, and we maintain those high levels given the significant uncertainty tied to tail risk scenarios on the Ukraine. Thank you very much and have a good rest of the month.